Well, from my side, post-trade transparency is going to create some interesting dynamics around firms. Not only have we had to deal with COVID in the past year, we've had Brexit, and what that means for post-trade transparency or trade reporting under MiFID II is that there's now an element where there's some UK directional reporting to APAs and some European directional reporting to APAs. The year ahead really is going to revolve around the UK equivalents. Really, it's going to be around the UK FCA and ESMA getting together, cooperating. We know that the FCA have already said that they're going to maintain ESMA MiFID II regime for a while. I don't know how long that while is going to be. We've already seen the FCA putting their kind of steer on things with large in scale thresholds being lowered as an example, but really that equivalence decision is really quite key, I see, certainly for that UK and European divergence for the year ahead for trade reporting.
And I would agree with that. I think that all eyes are on the SIs at this point, right? And everybody else that has to operate around them. So buy side trying to figure out who is an SI in which jurisdiction, and watching that evolution of the FCA regulation kind of take hold, and we all get a little bit more clarity around it. I think firms are just going to have to really, really monitor that, and of course third-party providers as well, to see what direction they take with their solutions.
Again, it's related to Brexit. It's related to where firms need to direct their trade reports to. There's what's happened leading up to Brexit is that the APAs have registered, or certainly the UK registered UK APAs have registered with a European APA or an entity within the European APA and a UK APA. And what that means is that firms have really got to concentrate on where they are directing their trade reports to. The APAs have given out guidance. They won't necessarily be responsible for correcting that information that firms sent, but both the FCA, the ESMA, and the APAs have given guidance about what UK firms need to report their trades, where European firms need to report their trades. Other issues that firms will find is liquidity, where accessing liquidity, where liquidity is going to sit. We've already seen that even in the past couple of weeks since Brexit go live, that liquidity has moved already. UK trading venues aren't trading on European stocks as much. What we've also seen is that the off-exchange and systematic internalizer reporting has also increased, and even on moving away from lit markets, not necessarily, but again moving back into those dark markets.
Yeah, and just to add on to what Chris just said, again, we're talking about SIs left and right, but I think that right before everything started to COVID kicked in, and as we were approaching Brexit, we were seeing local regulators really start to focus on the over-reporting. And that really comes down to understanding who in the transaction is supposed to be reporting to, for instance, deferreds, et cetera. And you can understand that. The volume of data, we don't need extra data to all have to process through, because two firms are reporting something that really only one firm should be reporting. And so we saw that firms, especially in certain jurisdictions, we saw the regulators coming down on firms to say, figure it out, get it straight, who needs to be reporting. And so adding the complexity of now having to determine, am I an SI in the EU, am I an SI in the UK, certainly can add some complexity to that. We are help to manage the SI registry, and so what we saw in the first month of operational processes during that first few weeks is that firms still needed to get some things in order. So in order to communicate out to the industry where they are acting as an SI, because that has a domino effect. If they don't clearly state which instruments they're an SI on, in which jurisdictions, then you're going to end up with over and under reporting, and that is what the regulator tends to be focusing on with the post-trade transparency reporting.
Yeah, and just to add to that, that's absolutely right. What I've seen in the past, just since the beginning of the year, is that already ESMA have removed the UK SI LEI codes from their register. The FCA have introduced their SI register. So it really is the SI's understanding, are they going to be a systematic internaliser in the UK? Are they going to have an entity that will be a systematic internaliser in Europe? Telling their buy-side clients where they're an SI and in what instruments or asset classes or sub-asset classes they're going to be an SI in. And then again, it's that registering that this should have happened quite some time ago before Brexit, but the SIs would have had to have registered at their NCAs, at the FCA, at ESMA. And again, have increasing that communication, and of course registering with SmartStream RDU's SI registry, which is absolutely key to this process of understanding, who is an SI and what they're an SI in.
I can speak from a data perspective. That's kind of where our world is at the moment at the RDU. But firms should already be processing the FCA FIRDs, the SCA FIDRs files, which are files that ESMA has been publishing for some years now, since the start of MiFID. And the FCA has, I think, paid attention to knowing how hard it was going to be for firms and trying not to burden them too much. So they produce some very similar files, from a format perspective, and so firms should certainly already be processing those files, whether it's the firm themselves or a third party provider that they've hired. And then it's about making sure that, the regulators are always very interested in knowing that what you're reporting is matching what your front office data looks like. And so making sure that now it's not just doing those kinds of systems and controls with the ESMA set, but also recognizing that you have another set of data. We did find that certain firms were leaning a little bit towards thinking that the data was going to be very consistent between the two. And we saw in the first few days of after Brexit, we saw that, whether it be the most relevant competent authority or the primary market, you saw data changing in the files, and large amounts of data that the companies had to process. So I think it's very important, and firms should be to a point already that they can manage both sets of data, that they're not leaning on the data being the same across the two jurisdictions. So from your question of where should firms be, they should certainly be processing the data, the new data, segregating the data to some degree so that they can report correctly to either jurisdiction, and be ready for the upcoming divergence, which we all know is going to happen.
Yeah, I mean, Linda's put that perfectly, to be honest. There's lots of data sets. It's tough, but none of the regulators want to trip up firms. They really want to work with firms. As Linda said, the FCA databases they've tried to format it so it is as similar to ESMA's were previous to the Brexit. and that's important because of the sheer size and volume of data that firms are working with. The systematic internalizers, those that are deciding to register their SI status by ISIN level, there's hundreds of thousands, millions of lines of data that's going to the RDU's SI registry as an example. But it's all about transparency. The key is for MiFID II and for trade reporting under MiFID II, it really was about, it doesn't want to lose the values of the regulation. The FCA may go down its own route in a MiFID III or a BRIFID style of trade reporting, but really, it doesn't want to get rid of those values of what MiFID II is trying to achieve. Whether it's around best execution, whether it's around price transparency, price discovery, and whether it's around transparency. That's what it's still trying to do. Even though we're in Brexit and the FCA divergence away from the ESMA, it's trying to help firms. It really is, and we will get there. But I suppose, again, going back to what this conversation is about today, what the year ahead is, we've got to look and wait and see what's going to happen. But I really hope that cooperation happens between the UK and Europe.
Yeah, I think it's just to add to that, I think it's going to be interesting to see in the OTC space in particular, right? What happens, I think they said by March 2022, they're going to kind of sort things out, right? They've adopted the current regime for the most part, but to see what's going to happen, especially with those EU investment firms, right, and the cross-border with the OTC transactions and how that's all going to settle, I think it's going to be quite interesting.
Yeah, absolutely. There's that transitional period that the FCA have put in. There's the temporary permissionings regime, which runs until about that time you mentioned, Linda. So it is work in process. The FCA certainly aren't dropping things straight away. There is that transitional period that will happen. I suppose it's just watch this space and to hear what the regulators come together and, the governments come together as well about with the UK government and Europe. For me, it doesn't change dramatically. They're still going to be wanting to see accurate and timely reporting, and the publication in an accurate and timely manner. Again, what's post-trade transparency reporting trying to achieve under MiFID II? It's that encouraging investor confidence, encouraging investor protection, decreasing in investor risk or reducing risk, with that transparency of post-trade transparency reporting. That's why, within 15 minutes, firms are able to see, individuals are able to see, investors are able to see, that and determine what the price is at any given time. So what the regulators trying to do, again, they're not going to try and trip you up. They, of course, want firms to have the correct controls in place. They, of course, don't want to see dual reporting or duplicate reporting. There are elements with the grey, ambiguous areas around UK firms reporting to APAs or around European firms reporting to APAs. But they will aim to try and kind of reduce that as much as possible. So for me, it's not going to change. ESMA are going to be the same. The FCA are going to be the same. Accurate and timely reporting and potentially publication to the market.
Yeah, I mean, I totally agree with Chris, and I think this, we see this over and over again with every regulation, right? First, it's, do you have your are you reporting? Right? Did you make an effort, and do you have your plumbing in place, and are you reporting? And then the second thing is around the accuracy. And so, it's just, nothing new. Are you under-reporting? Are you over-reporting? And is the data in your report accurate? And I feel like the regulators tend to just want to see that effort. So are you putting the controls in place, and are you thinking through your process that you're really reporting accurate data that's not, regulatory data maintained on the side, but it's actually the data that you're using within your trading, workflow. and then and then working through if there's any issues with accuracy there. But do you have controls in place to catch it? So if you have, there's a couple of fields out there that get highlighted sometimes as fields that firms stumble over, over when they're doing their reporting. But as long as you're proving to the regulator that you're really focused on it, it seems like that's enough at this point, especially as things are a little gray for the next 12 months.
Yeah, exactly. That the proof of the effort that firms have put in to make to change the processes, to put those extra controls in place, to have the governance in place that at least they're showing the regulators that they've made that effort, and it's written down, and if there's been mistakes since MiFID II go live, what Kaizen are doing with their quality assurance testing is identifying those errors. Don't be afraid to reach out to the regulators, whoever that may be, any of the NCAs across Europe, and just have that open conversation with them. Yes, post Brexit, there's going to be those extra kind of stumbling blocks, maybe, but there'll be a bedding in period. It will take some time, but show that effort and proof that firms have put things in place to make sure that it's in the right and valuable reporting that's required under the regime.
I think they're pretty, what you would think they would be, right? So you have reputational risk, you have monetary risk, pretty much falls into those two buckets. And I think that with all of the, with the goal being transparency, you also have you're a little bit more exposed. And so I think that, if you don't have your ducks in a row, as they say, then I think that it's an overall, from a business perspective, it's going to hit your wallet as much as it's going to hit your reputation in the market.
Yeah, I couldn't agree more. What we don't know yet is there hasn't been any MiFID II penalties that we saw in the last couple of years that were MiFID I penalties with the big two banks that we saw penalties given out to. So we don't know what the MiFID II penalty regime is. What we do know is that through bilateral conversations with firms and from hearing through the industry is that regulators are speaking to firms across their MiFID II reporting requirements. They are identifying errors, speaking to firms, questioning why you did this, why you did that. So yeah, it's reputational. There's that potential financial there, which I don't know when we're going to see our first MiFID II reporting fine or penalty given out, but the regulators aren't going to let firms get away with it forever. But I don't know when that's going to be. It's sorry, Linda.
No, I was going to say I think it's going to be quicker than MiFID I, because I feel like the regulators have become more data savvy, so they can ingest the data a bit better and quicker. And so I do think it will be, we're dealing with a different playing field with MiFID II.
Yeah, couldn't agree more.